All right. Looks like we got a good amount of people. Certainly, people will still continue to filter in. But I wanted to say thank you first and foremost to everyone joining with us today. There's a reason we put on these great webinars and have guests on is to help try to educate people on many different investment avenues. Today, we're going to be focusing on short-term rentals. We're really pleased to have Lame Kinikini on from Elk Ridge Investments, going to be talking and taking a deep dive into things that people typically just overlook with short-term rentals, everything from marketing to how you price these things dynamically to make yourself successful. I know we've, at this point, probably most of us have, some personal experience. I know I personally have plenty of times with Airbnbs and the benefits that they can offer, but making sure that if you're going to go this route, understanding how it diverges from just traditional long-term annual lease real estate or other different types of real estate investments is important because as this ecosystem matures, the competition gets more fierce, people get sharper, people get better, and you can't just relax and rely on your laurels or rest on your laurels to be successful in this space. So we're really pleased to have Lame on. Just a few things. We always like to give a little presentation. My name's Alex Perny. I've been here at Advanta since 2012. I've had a hand in many hundreds of different types of real estate investments and other alternative investments, and seeing the ecosystem of Airbnbs kind of get its foothold back in 2012 and see clients invest in it and how this stuff has matured has been fascinating to me. And it's really great to have someone like Lame on to kind of explain and review how this stuff kind of works at the present market. But if you have any questions on how to do this stuff through a self-directed IRA or retirement plan or any general questions on the retirement end aspect of this, feel free to reach out to me. All of my contact information is right up there on the screen. A quick disclaimer, Advanta IRA and our employees do not provide investment advice, nor do we endorse or promote any investment product. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. A few key takeaway points from my perspective that I want people to understand from this is that any IRA or former employer plan can qualify to do these kind of investments, right? If you have a tranche of capital that is held within an IRA or an old 401k, and you'd like to use this to invest in short-term rentals, whether it's directly going out and finding the deal or connecting with someone like Lame and his team that can put these things together from the investment side, again, any of these kind of things can qualify, right? So if you have questions on which types of plans you can use and how that works, I'm always willing and able to help you out with those kind of questions. You choose the deals, right? Advanta IRA, we do not have a list of endorsed, promoted, or sponsored investments. So you have full franchise and ability to go out and find the kind of deals that you're looking at. Again, specifically, we're going to be looking at short-term rentals and how that works today, but really for any type of real estate, whether you're interested in investing in raw land, short-term rentals, long-term rentals, commercial real estate, any other type of real estate, or if you want to be on the debt side, you get to choose those deals, right? So we can help you kind of understand how to do that and how to plug in. And then that's one of the big driving factors of why we have these webinar presentations is to help to educate you on how all of that kind of works. Because if you've never done self-direction before, we're all just kind of used to logging on to your broker's website and picking, an ETF for a mutual fund or just buying Microsoft or IBM. And not to say that's not a very valid and you can be successful in doing that, but understanding the mechanisms of how the self-directed marketplace works is very important. So understanding that any plan qualifies, you choose the deals, and especially with real estate, the big thing that most people don't kind of understand about other types of investments, because there really isn't ongoing expenses past just, hey, I bought it and then maybe I sold it, or that expenses related to these kind of investments are born from the IRA. So floating personal costs, making sure that if you're going to be doing something like this, especially in real estate, is that you have enough capital to either float the purchase and then there's a robust enough revenue stream that's going to kind of support the property, or again making sure you have that kind of capital allocated to have the initial purchase plus any maybe immediate expenses that come up as well. And we do whole presentations specific to real estate on looking at what expenses might come up, how those things are paid. Not something that we get too far into the weeds here on today, but it's important to know, especially in looking at real estate, as that is a big divergent point from, again, what people are used to when it comes to more traditional investing. So choosing the kind of plan that you have, again, any retirement plan qualifies, everything from IRAs. You can do these things through health savings accounts. I have clients that own multiple rental properties in their HSAs, which I find fascinating. ESAs, old 401ks, pension plans, all that kind of stuff qualifies for this. You choose the deals and then expenses being paid from by the retirement plan as well. A little bit about Advanta before we turn it over to Lame. We've been doing this for over 20 years. We got our start in self-direction and non-traditional assets. So again, it's not something that we started out as maybe a more traditional bank and then kind of segued into this. This has been our core focus of our business for the entirety of our existence. So again, this is not something that we just decided to do. We have a very large network of people that are, industry experts on this. We, ourselves are very, very in tune with how this stuff works. To that effect, we've also, gained a lot of client trust in this arena. We administer over $3.5 billion of client assets that are solely self-directed. Again, we're not a broker dealer. We don't handle stocks, bonds, and mutual funds. That 3.5 billion AUM is constituent of just things like real estate, mortgages, private stock, different types of partnerships, private trusts, LLCs, limited partnerships. All these different kind of things help to make up that number. And again, it's something we're very proud of for the adoption that people have come in and seen the benefit that this can potentially offer them. Now, one thing that people maybe get a little bit confused on in this is that since it is a very different aspect of investing, are you giving up any traditional protections? Well, with any investment, there's inherent risk. It's up to you as the client to determine what your risk profile is, because once an investment is made, just as with a traditional brokerage, there is an inherent risk of anything that leaves a financial institution. But with regards to us as a institution that manages cash for clients within these accounts, you're still FDIC insured up to applicable limits. You still have fidelity and surety bonds, errors and omissions insurance against what we're doing. So you're not giving up any type of traditional protections that you're used to. It's still very well established, with this kind of investing, that you might, be curious about, considering it is so markedly different from, what most people are used to in the market. And then we also offer personal client administration for any client account here at Advanta. You have dedicated account managers. So if you have a $5,000 IRA or a $5 million IRA, you always have a single point of contact. And that helps to, one, provide great customer service, and two, helps to provide you with the information and procedural aspects that some of these more hands-on investments lend themselves to, especially real estate, right? You need to coordinate renters or property management companies. You're always dealing with the same person. You have the ability to pick up the phone and call them. You have the ability to send them an email and they get back to you. So it's something, again, that kind of program for these specific kind of investments is something that we are very proud of. Now, I'll take a step back. I want to turn over to Lame. We're really appreciative of him taking some time out of his busy day to come and talk to everyone. I do encourage you to ask questions. Having these great guests on here is very beneficial. But if you have specific questions on maybe how some of this stuff works, or you want to kind of get an industry expert to kind of answer those for you, make sure you do type those into the chat box. I will monitor the chat box throughout the presentation and pose those to Lame as they come up, or there will also be time at the end to ask questions directly as well. So with that said, I want to turn it over. Lame, again, really appreciate you being on with us today. I'll let you take it from here. And again, thanks everyone for joining.
Alex, appreciate you having me. I genuinely am excited to be here. I know we've worked together in different capacities over the last 2 years. We've been able to develop a relationship. So I appreciate you. I am excited to kind of speak to you guys about an industry that I have spent a lot of time in. I have collectively over 10 years of experience in real estate, 7 years of that specifically in short-term rentals. And I'm excited to kind of dive into really the nuances of it, because I do feel like Airbnb is probably one of the more talked about industries in real estate, simply because of how it can be participated in and its history. And I'm going to kind of go over all that. Just to give you some context with me, I built an 8-figure business where we've been able to do this exclusively. We've built an entire infrastructure around the short-term rental, industry, specifically the short-term rental tax loophole. but it's also served to be an incredible asset for our retirement accounts. But I want to focus really more on the strategy side of how to operate it, some of the tech stack we do, and kind of our acquisition model, which is important for you guys as owners to be able to understand if you're wanting to jump into this space. There we go. Okay. First and foremost, my journey starts really with my why. I am a proud father before I'm anything else, and a proud husband. So I have 4 kids. My company is resided in Utah, where I have a beautiful family that supports me in everything I do. I think this is a important piece of real estate because it's easy to get lost in the weeds of everything that we do if you don't have a reason why you're doing it. So this right here is my why. Jumping into first the market, right? Airbnb is an emerging alternative asset that has really disrupted the market, right? We essentially are not in competition with hotels when it comes to our target demographic. Contrary to what many of you have seen in the market today, especially in the noise of real estate, is that we are competitors of big names, Marriott, Hilton, Wyndham, all of these hotels choices. But really what we're finding is that Airbnb is serving a demographic that frankly, like these other hospitality options on more of the hotel side, they just can't compete with, right? We focus on a larger home, right? We focus on essentially the experience of the amenity. What we can, some of our biggest builds, and we're going to go through them, we can just create an experience that frankly, Marriott's and Hilton's that they can't, right? A private, exclusive experience with hotel-like amenities that, by the way, you have a full-size kitchen where you can cook your own home-cooked meals, right? That's just an experience that's very different. It's very unique, and understanding that value proposition as it pertains to some of the options in the guest and the hospitality space is really important for you to be able to participate in this. One of the things that from an investment perspective that's awesome is you can create incredible cash flows relative to other alternative investments in the real estate space that aren't hotels, right? So in terms of the amenity space, we can compete in a very niche market because of the type of service we can deliver. But then when you start to focus on the other side of the residential space, such as long-term or single-family residences, we can almost take the best parts of big hospitality, such as the cash flow, and participate in that. So on both ends, really, we are finding a happy medium that you're participating in this space that frankly is and has disrupted the space for us to be able to participate in. Now, one thing I do want to speak to, and this is a lot of noise in the space, is really the market over the last few years. COVID marked a very unique place in real estate as a whole. Everybody that's in real estate knows that, right? Because COVID had record low interest rates. With all the money that was being pumped into the economy, there was a lot of spending power. So that was one thing that did, in fact, kind of serve Airbnb very well, in the sense that there was a lot of money that started to get pumped into this industry, because if I wanted to participate at hotel-like revenues without having to have significant amounts of money to go buy a 100-unit hotel, that's where people got into Airbnb. And that's why we saw a huge increase of supply, with the demand being really inflated, right? And this next slide kind of speaks to that, right? This speaks to really where Airbnb is today, and that is the competition. When COVID happened, there was such an increase of supply that really the market demand, when it started to come down because there was no longer COVID money, people started traveling less, really the supply maintained itself, because during COVID, you could frankly put a bet on bricks and make money, right? What we're showing you is a listing that is very real and made money, right? And the truth is that a lot of the noise that we're hearing today in short-term rentals dying or not being profitable anymore is really speaking to the fact of where the market was just a few years ago and kind of the effects of what we're seeing, because 90% of our competition today that are mom and pop operators are operating at a level that frankly is no longer the standard to make money, right? During COVID, you could make money with something like this, but it isn't the case anymore. You need to understand how to play the game, right? And a lot of people use the word saturation. You hear that name a lot. In this game of STRs, people are always saying, hey, the game of short-term rentals, it's oversaturated. Really, the more accurate term, right, based on the market and everything else that's happened, is that the market has just matured, right? We saw an inflation and increase of supply. We saw an increase of demand for a short time. That demand stabilized, and herein lies an opportunity now to where most are running from this industry, but it's because they don't understand how to play the game. And therein is where an opportunity exists for investors such as yourself, right? So let's dive into some of the operations. These are the things that you need to understand, right, to play the game well. And there's a lot here, but it first starts with understanding how to build and play the game with your tech stack. We have a list here, and this is, I mean, I'm going to be very direct. This is very like high level information in terms of how to operate. But the nice thing about it is that you actually don't need to know the nuances. There are resources, tech companies, tech stacks that you can implement in your business to be able to help really mainstream things. So you as an operator, if you choose to go out and buy, you don't actually have to do it like me and start a company and get in the weeds. You can actually utilize some of these vendors to operate at a level that is comparable and competitive to what the market is today, right? Kind of going back to that old slide, not being a part of the 90%, not being part of the oversaturation of garbage. You got to compete at a high level. First one is Guesty. So Guesty is a centralized booking and guest communication channel for all of your listings. So a lot of people know Airbnb, and they often oversimplify the short-term rental space as the Airbnb space, right? In reality, there are, and people are always surprised at this fact, there's actually 40 plus different websites, different operating services such as Airbnb platforms, if you will, that you can post a furnished rental to be booked out, right? People just only know about Airbnb. Airbnb has done a great job of being a leader in the space. And a lot of you also know VRBO, right? VRBO, but then people don't know ALE Solutions. People don't know Furnish Finders. People don't know hospice. Like there are so many different channels that you can actually throw your property out on to be marketed to essentially spread your net wide to serve a bunch of different avatars that are coming in. Guesty helps you centralize that so you can manage it all in one place. Breezeway. Breezeway is a big operations platform that allows you to maintain your property inspections, quality control, streamline all of those things that alternatively would be very time consuming, especially if you're managing really a portfolio. And when I say portfolio, one or more, because in this space, one short-term rental can take a lot of your time. It can take a ton of your time. And so people don't understand, if I'm even wanting to do 2 properties, right? And we're going to talk about an acquisition strategy where that makes it really possible. If I just wanted to do 2 properties, like that becomes very quickly a full-time job if you do not have the right things in place. And that's where this comes into play, right? Monday.com is what we use as project manager, Slack. But really the big thing I want to talk about is Price Labs, right? And this is a dynamic pricing revenue optimization platform that essentially takes in real time market data and demand signals to be able to allow you to be priced effectively in the market, right? And this is where the clash of residential traditional management of single family residences meet hospitality, hotels, optimization, big operations. This is where you really find that middle ground of being an STR operator, because you need to understand the nuances of hotel strategy while operating a single family residence, right? And we're going to dive into some of those details, right? So dynamic pricing. What is dynamic pricing? One of the rookie, I'll say it this way, one of the rookie questions that I get asked pretty frequently, right? And this tells me a lot about how they're thinking about it. And it should shift your framework after I tell you this. A lot of people ask me, well, what is your average daily rate for your property, right? They'll look at a property and it's like, what is something like that actually like, what is the average night of it cost to stay there? And the reason why that's such a hard question to answer is because the truth is, if I am managing to meet the market occupancy at its max value proposition, I'm actually changing the pricing quite literally every day, every other day, at very minimum, weekly, right? Because your effective pricing strategy should take into account occupancy of your competitors. What is available on the market? What season are we in? What local events do we have that are coming up that need to be accounted for, right? A lot of people know that, the Super Bowl was held in Arizona this last year, right? And a lot of people don't know that when that happened, the rates for short-term rentals increased drastically. I think to get a normal 4-bedroom, 2-bath in Arizona, in Phoenix, Arizona, like it was about $1,000. I think the average was like $1,000 a month for a normal property, and that's because of the Super Bowl. People are coming to stay for a specific reason. If you do not know that, your property was booked a year in advance at the lowest rates, which at the lowest rates meaning like you probably just set it at a rate that you thought was normal, and you missed out on the opportunity cost of all the dollars on the table, right? And really what it comes down to when it comes to pricing strategy, you need to understand holistically some of the resources that you need to use, such as dynamic pricing tools, right? Such as price labs, to be able to play the game at a competitive way to meet and take everything off the table. One thing that people are often surprised by, right, is in my experience, 100% occupancy is actually a poor thing for your portfolio. Usually if I'm 100% occupancy, there's a few other factors that need to be considered. Am I underpriced? If I'm usually 100% occupancy, a lot of people in the Airbnb game, they'll be like, I'm booked out for the next 4 months. That's a red flag. Because if you're booked out for the next 4 months, that means typically you are underpriced. You're not taking into account seasonality. You're not taking into account future reservations. And granted, I'm generalizing here. If it's a market where they're going out for vacations, like it's different, but the principle remains the same. If I am not looking far in advance of what the market traditionally does, what is available to the market, and what can be done in the market in terms of pricing, like that is, I'm not taking advantage of money left on the table. To where ideally in a framework that we work out of, we're looking at really the next 30 to 45 days. That is the time at which we're looking at to be able to price aggressively. And then outside of that, progressively, as it goes further out, based on occupancy, based on what's available to market, seasonality, our prices actually further out are going to be maybe a bit more expensive, right? Because I'm trying to get not just anybody to book my property, but the individual that is going to pay the most amount of money, right? And so ideally, when you are maximizing your revenue strategy, what we've actually found is that your max profitability on a unit isn't at 100% occupancy. It's actually closer to 70, 80% occupancy. Because now I'm capturing not just any avatar, not just any occupancy, but I'm capturing occupancy at a certain time where they're willing to pay the most amount of money for it, all things considered, right? Whether it's that early bird investor, that early bird guest that just wants to pay for whatever, so they're booking 6 months in advance, or whether it's that last minute vacationer and there's nothing left. Me understanding where the market is, what people are looking for, is going to allow me to make sure that I am pricing it at the profitability that is going to maximize our margin, right? And that is the game of pricing strategy. Now, a lot of you guys are looking at this, and you're looking because you're looking at some of these, and hopefully you guys have read some of the slides, right? There's a lot of adjustments that need to happen to that. Minimum stay rules, right? Not letting somebody book out, less than 3 days if they're 2 months out. If they're 6 months out, your minimum stay rules is saying, hey, you can't book for any less than a week, because I want people that are going to stay longer to book first. And then as it gets closer, we can work on people that are going to book smaller periods of time, right? All of these things, these little tips, tricks, and strategies can be optimized using different we use Price Labs, and by the way, I don't get any affiliate. I'm not like this is really just free game. But Price Labs is one of the few that I found that kind of make it as easy as it can be to understand this dynamic pricing strategy, and give you the tools to be able to allow you to do all of the things that I'm telling you. Event-based pricing, having market dashboards, orphan nights, right? If somebody books Sunday through Monday, and then another person books Friday and Saturday, your weekend's gone, which is high travel. How do you then price those orphan days in between, is what we call them, right? Those Tuesdays and Wednesdays, those 1 days in between, or those 2 or 3 days in between that are low occupancy, right? Those are some of the things that a Price Labs PMS or a Price Labs tech stack can help you utilize. Another one is, outside of Price Labs, is Wheelhouse is another big one. And then I think those are the two big primaries. There's a few others, but I highly recommend Price Labs because I think it's the most user-friendly. So, Alex, do we have any questions up to this point? Is this clear? Does this make sense?
Yeah, we have one. I think it's kind of an interesting point to kind of make as well on, I know we're talking about by utilizing other tools, but one thing that, again, I just kind of want to take a minute to kind of point out here. And again, we don't always necessarily know the demographic of who is attending the webinars, but if you are again coming from that single family mindset, where again anything other than 100% occupancy on your single family home for a year is not good, I think is the mild way to put it. Looking into this, of just understanding again the nuance on how this works is what I have seen really kind of been the the way that this stuff is really kind of matured, right, to that point of looking at this stuff from more angles and saying, hey, like, yes, it is real estate. Yes, you're dealing with renters, but not just kind of chasing that same exact metric of success with, the single family long-term market, and understanding that, while short-term rentals and Airbnb VRBO did start as kind of the child of, the real estate market, right? Vacation rentals have been around for, as long as real estate's been around, but this more, again, high frequency vacation or short-term rental space has really again matured to that kind of good use of the word, to a point where they are almost two different asset classes, right? Yeah, it's still real estate, but the way that you do this stuff to a high degree of efficiency and profitability is going to be very different than what you're doing for just a single family long-term rental play. So again, I really appreciate you kind of spending the time on these tools to help people understand the differentiating factors between the two, and what you need to kind of put in your toolbox to be successful with it. Now, the question that was just posed, and it's interesting because again, we're talking right now about a lot of different tools, right, that are going to help people be able to effectively do this. And the question, and I'm sure you probably could give some context on this, and I would say preface this, maybe we all need to connect afterwards. The question is, we're thinking about creating a direct booking website for our listing. However, we're not entirely sure how to go about marketing it. What I would say is kind of maybe get your thoughts on that question of saying, like, are there robust enough tools out there that are kind of better utilized to kind of fit the need that they probably have, or is it maybe capital or cost prohibitive to do something like building out your own booking platform?
Yeah, let me go a few slides back to answer this question, because there's a few, I think we're going forward. Sorry, let me go backwards, because I want to speak to this. So Guesty is one of those property management services that we call them PMSs in this industry, and there's a few others. Guesty's one of them, Hospitable's another, Hostaway's another. You can kind of Google these. A lot of times these platforms will actually have a service in them that allows you to create your own direct booking channel. And so they'll actually create for you your own website, and they'll create a link and allows you to kind of forego, because the reason and the benefit of why you would want to do your own direct booking site is really to be able to forego some of those platform fees. Airbnb all in, it's about 20%, right? Because they'll take, or 15%, because they'll take 12% from the guest and 3% from the host. And so there's a middle ground there as a host of making it cheaper for somebody. You can give them 10% discount. They're still getting it cheaper and you're making significantly more money, right? And so there's a big benefit to doing it directly. Now, what I found with these PMSs is that typically it's basically just a way in which they can book, and there's not much else out of there in terms of like help with like marketing and things of that nature. So the direct booking optimization of marketing really comes down to, that becomes almost like another segment of your business that, in my experience, to get it to the best place possible, you really need to build it out organically. And there's a lot of ways to do that, right? In terms of how you market it, how you design it. Like, a lot of people are marketing their STRs direct booking. The most success I've seen has been social media, frankly. Like, they're just building out a beautiful design on a social media page. They're running traffic to it. They're having people go to the direct booking site that's created that Guesty may provide for you. So you really can get into it without a ton of money in, but obviously, you know, once you figure out how to do it, you want to make sure that you're optimizing. Because frankly, I built my entire business entirely dependent on the marketing found through the OTAs, which is Airbnb, VRBO, and all the other booking sites, right? Because I don't have to go outside of that. Now, with that being said, I know a lot of people that have booked direct bookings and created those platforms to be able to find them, but a lot of it just comes down to figuring out your business model of how to attack it, and then just doubling down on that. Because what I will say is, when you're on Airbnb, like for example, there is an algorithm. There's an algorithm that you need to be very aware of how they're looking at you as a guest to be able to promote you, right? Anybody that's in digital marketing, you know SEO, right? Search engine optimization. That is the platform, such as Airbnb, picking and choosing the top properties to showcase on their first page. So when somebody Googles Salt Lake City, Utah, which is where my market is, right? Or when somebody types that in an Airbnb, you want to be the first one to pop up on that page, right? And to do that, there is a very defined algorithm that nobody knows, only Airbnb knows, that you need to be able to understand how to play that game, right? Price labs, like dynamic pricing, is one of them, right? Airbnb is looking, how frequently is this host updating their pricing? Because if they're not doing it daily or weekly, and they just have two set flat rates, one for the weekend, one for the day, or for the weekdays, they're not a high performing listing. They're not somebody that's treating this listing as a business. Therefore, you're going to go down in the SEO, right? And so that is a game that you have to understand to play whichever route you go, because you're playing the same game if you're doing direct bookings. If I'm doing direct bookings, I'm putting money in marketing dollars to drive traffic from my social media page to book with me directly, right? Whereas Airbnb, they're already spending marketing dollars, so I just need to learn how to play their game and get their eyes. But if you want to create the eyes yourself, you just have to understand. So either way, there's going to be pros and cons to any strategy, but those are just some high-level things I would consider if you're wanting to jump into that. So
yeah, and just to piggyback on that, I've seen not necessarily what the specific context of creating a direct booking website would go into, as opposed to just doing a white label kind of solution like you're talking about right here with one of these other providers. But if you'd never built out some type of API or platform to integrate customers and products, it can be very expensive if you haven't done it before. It takes continuing ongoing maintenance. And again, to that point is that if you've never done that, I would also just encourage doing research on the cost of that type of service development, right? Because think about whether it's selling a widget, whether it's booking a property, the kind of technology behind it's all relatively similar. So doing research on that kind of portal development to see what those costs look like, or paying for a consultation from someone in the software or online platform development space, because that VIG that you're going to be paying to Airbnb and VRBO, well, yes, we always want to say, hey, where's easy money that we can get in the margins of this? Well, if we can get rid of Airbnb's cut that they're taking from these bookings, that's easy money, right? But when you start to look at the ongoing development costs, the other have to rely for on marketing to kind of compete with these other platforms, is it really a better benefit? I'm sure Lame, just like you said, you've seen people be real successful with it, but they're doing, they're taking on a lot of that work and responsibility, and maybe not that's the right fit for you. So just kind of from my own perspective, what I've seen with clients that have been invested into different development plays in the software and internet portal space, it can be just like building a house. You get the quote, add 30-40% to that final build tally for building a property out. So yeah, just a few other things to add on there. And then before we get just one more question so we can clear out the queue. And again, it's a high level one, and I think this presentation generally kind of leads into it, or we might be getting into it. So maybe you want to belay this one a little bit. But someone simply asked, what makes a property an attractive STR opportunity? So I'll kind of that's cleared out the questions. I'll let you lead off from there, and if you can, you certainly kind of, if you're already going to cover it later, but yeah.
Yep, I love it. And that, to your point, Alex, it's just segueing right into it. Let's get into the key details of investing in short-term rentals. And then I am going to talk about, really, I'm going to show you guys one of the deals that we've actually done and some of the key metrics that we were looking at. Because what I will say, just to kind of touch on this question quickly, and then we'll move forward, is that really you can create any deal deals in any market when it comes to short-term rentals. They're not found, they're created. And so a lot of this comes down to, the deal structure of the asset itself, its state before you took it over. Is it an existing short-term rental? Is there an opportunity for me to be able to take it over and to better operate it and create a margin that wasn't there alternatively? So there's a lot of that into it. And so I think as we go through, you'll kind of get an idea of some of the key points that we're looking at. But at the end of the day, it really comes down to less of where is the deal, and it's where's the good bones of a deal, and let me create it, right? Because any good deal in real estate, it's never found, it's always created. So, and I'll create that framework for you. So why invest in short-term rentals? The biggest thing, right? And this comes down to some of the things that we've already talked about, but I really want to harp on one of them that we're going to talk about, because for me, this has been kind of the driving factor for our business model. But obviously, you guys know that short-term rentals, they're one of the very few where I can take a single family residence and quite literally operate it and make revenue similar to that of a commercial asset. I'll give you an example. We bought a 10 unit, right? And we wanted to do mixed use, meaning some of it I was going to keep long-term and I was going to convert some of them to short-term. So that's what we did. So we bought a 10 unit that had 80% occupancy. So it had 20% vacancy. So there was 2 doors that they were looking for tenants. So I bought this 10 unit. I kept the 8 units stabilized, meaning I kept it as long-term rentals, right? The 2 units that were empty, I put furnishings in them and I put them as a short-term rental. In 90 days, those 2 units did 2x more top-line revenue than the other 8 combined, right? That is an easy example of the opportunity that exists cash flow wise in short-term rentals, right? And it's the only asset class where you can do something like that, where you can turn a single family residential asset into commercial-like cash flows. That's really the name of the game. But it needs to be done well, as we've talked about all the operations, right? You have direct control over performance, right? So unlike other alternative investments such as stocks, mutual funds, things of that nature, you really can control in a very real way your performance of your asset, right? You can go and add amenities, and that's the game of STRs. It's always evolving, right? If I'm taking real feedback from my guests that are staying in the property, hey, we wish there were more towels, hey, this, that, the other, you can have real control over those things. And likewise, you can always continue with the cash flows of your asset to reinvest to enhance experience, right? If you have a property that has a really good month, you can add a cold plunge. You can add a hot tub, right? If you If you don't have the funds to do it right away, short-term rentals is the only place in which you can start and continue to build on without seeing significant negative impacts like you would a hotel or this, that. Certain hotels have an expectation to where you have to have this level of service to operate, and that's just not the case for short-term rentals. There's certain things that you can be nimble on. Appreciation and equity growth. This is also another opportunity. Some of you may seen this in your markets where you are effectively getting an appreciation bump because it has a permit to be short-term rental, right? That's where a lot of opportunity in some of these more seasoned markets, and that is something that you need to be aware of, right? Little side tangent, make sure you're aware of regulation, things of that nature. But you also need to turn the framework of regulation. Regulation to me isn't a bad thing. It's an opportunity for equity, because if there's regulation, there means there's a cap to competition. So you just need to figure out the right way and due process to be able to participate. And when you do, what ends up happening is your equity is now on a bigger trajectory than alternatively a normal single family residential home would be, right? Now, I'm not going to say it's similar to commercial, because we know in hotels you can literally double your equity just within a year. That's not the case in residential. So there's still some really frameworks that you have to be aware of and expectations. However, my point is, you can create significantly more appreciation in an asset that is a single family home than you could alternatively. And it's controllable, kind of putting these two together, direct control over the appreciation. In some ways, similar to that of a commercial asset, I can create more equity in my home than I can normally, right? Where I'm just having to ride the market and wait for all these homes to appreciate, right? The last thing that I'll talk about, and then we'll move on, is the tax advantage. There is a very real opportunity, especially with things considered such as the big beautiful bill. There's a piece of that bill where 100% bonus depreciation was reinstated. And that is one of the biggest short-term rental benefits that people do not talk about, and that is the tax benefit found in this. And granted, I know we're talking about, a lot of you in here are here because of retirement accounts. That is something that's still beneficial, right? Because the tax benefits later on, if you're ever pulling out, you need to be aware of, right? Because these can help in some way. But for those of you that are on normal W-2s, this is really important for you to understand. For those of you that have businesses, high tax liabilities, participating in a short-term rental is one of the few ways where you can take active depreciation against an asset and put it against your active or ordinary income. And you can only do that in real estate two ways. If you are general ways, these are buckets, I'm kind of generalizing here. If you are a real estate professional, which is the majority of your hours and the majority of your profession is real estate, your real estate agent, right? Your real estate investor, etc., right? That's typically unrealistic for a lot of people that are in W-2s or in working jobs that have been in there for a long time and making good money. The other way, which is where the opportunity exists, is you own a short-term rental and you participate 100 hours in the year you take the benefit. That's it, right? And that's a very real benefit, that you can take 100% of that bonus depreciation against your active income. And I'll show you hard numbers of why that opportunity is important. But these are really the key points of why investing in short-term rentals is such a valuable thing. So I wanted to pause there. Alex, is there any questions we have before I move forward? Because really, I'm going to take everything I've talked about and show you guys applied in principle and kind of walk you through a deal. But okay, I don't think there's any other questions. So we'll move on, and then I'll kind of wrap up and we'll do a Q&A. So key benefits, STRs inside. I'm not gonna touch on this because Alex he's a professional in terms of some of the benefits of Advanta IRA, but for all intents and purposes, like, these are some key benefits. No tenor guest management if you have it done for you. STRs can outperform stocks, which we've talked about, both in return and control and equity. It hedges against inflation, and you're building it in a real asset, right? These aren't stocks that are that are, not physical. These are hard assets, things that you can touch, feel, and actually, hold in your hands, right? Which is very, very valuable. But I want to kind of translate all this into what do deals look like today. Before I step into this, there's a few things about real estate opportunities of real estate that are important to note. One of those being, there's two ways that you make money in real estate. First one is how you operate, which we've talked about. We've gone in detail, understanding your pricing strategy, having some of these things to make sure you're operating at a high level. The second way is how you buy. People do not know that there is an acquisition strategy outside of traditional loans that you can buy properties, namely seller finance, subject to, lease options, contract for deed. These are all different opportunities, and we can get into these later. I mean, this is something that if you guys ever want to understand, I'm happy to help, but just understand that there are different acquisition strategies that allow me to purchase assets, purchase real estate investment assets alternatively, where I don't have to be subject to 20% down and the market interest rates, right? And I'm going to show you one of those deals, because when you combine those two of the short-term rental investment strategy with acquiring real estate creatively, you really get and you create deals such as this. This is a property we found in Austin. This is a property that was owned free and clear. The seller on this unit does not have a mortgage on it. And so it created an opportunity where I could approach the seller and create a note between me and him. I didn't have to go to a bank and put 20% down, be subject to the market interest rate. Me and him created a deal where I created a note that you'll see is far less than the market today, and I didn't have to put 20% down. In fact, I put a little bit over 10%, right? And so this, and by the way, these deals, they're not hard to find. Like, these deals are actually, like, people don't know that 42% of homes owned in America are owned free and clear. So when you hear, oh, he owned it free and clear, I mean, there's a lot of sellers like that. And in fact, this seller is more incentivized to do a seller finance deal for tax purposes. If I go buy this cash with a loan, he has a huge taxable event. If we create a note for him, he is now gaining interest. There's significantly less tax liability, and it's simple, right? Like, he's compounding his money, right? And that's why this opportunity exists. And people just, for whatever reason, people don't understand that these opportunities are out there. But I want to dive into details, and then we'll do Q&A, and I won't take very long here. Okay, so I want to walk you through the deal overview, and we can ignore some of these terms, but this is just, these are some opportunities that exist that people aren't aware of. But we purchased this property at $2 million, okay, on a seller finance note. The note that we purchased this property at was 4.85%. I closed this property in December of last year, when rates were at, I believe at the time, where investment rates were 7.25%, 7.5%. And so I closed this property at a rate that is significantly less than monthly. And then on top of that, this was actually already being operated as a short-term rental, but this individual had a property manager on the site. So because of that, his gross revenue, automatically he was cutting a check 25, 30% of gross revenues to this property manager. So therein, if I'm buying this property and I'm self-managing it, what it allows me to do is I'm able to essentially create a margin where I can create a margin of profitability because I'm self-managing, right? And that's the opportunity, right? But what I really want to focus on is the down payment for us to buy the property, touch it up, do some renovations. We bought some of the furniture, including it, so we really didn't do much. It was $300,000 on a $2 million purchase price. That's just a little bit above 10%. I think, sorry, I'm not good at math, but let me do that math real quick. What is $300,000 of $2 million? Proportionally 15%. So all in, I bought the property, updated the property, furnished the property for 15% of the purchase price, right? All in. If I'm buying this traditionally, I'm putting 20 to 25% down just to buy it. Then I have to come to the table with furniture and everything else. This is the opportunity that exists, right? Because now for $300,000, I'm buying a $2 million property that year one, I can depreciate $600,000 of depreciation against my active income. And that's because of the big, beautiful bill. Down here, it shows 180. It's actually 600 grand now because of the change of the big, beautiful bill, right? Because of the change of the depreciation, how much we can take. That is the opportunity in real estate. And granted, we haven't even talked about cash flows, everything else like that, because that's, you know, you can see here the delta of it's 11,000 all in for my PITI. You know, last month we did $22,000 top line on that property. Granted, we had expenses and everything in there, so that's not a full margin, but you know, if you have an expense ratio of 40%, you're still making a couple sixes a month on this property. And you were able to get $600,000 in depreciation, and you didn't have to put as much money as you would alternatively. That is the opportunity in today's day and age of short-term rentals specifically, right? And that is where, to me, this is one of the best times to participate in short-term rentals as an investor to be able to protect your guys' interests. And again, you need to understand how to play the game the right way. You guys saw that property. It's beautiful, professional pictures, like all those operational things matter, but you know, that's why it's so important to not only work with people that know what they're doing or to take the time to understand how to do it, but then to buy the right way. And if you can do that, there's a lot of value in this strategy. So.
Yeah, no, and I think those are all fantastic points. And one thing that I, you know, being some kind of stumbling over my own words there, is that, you know, especially if you're a seasoned real estate investor, right? You know, you can go walk through, if you're listening to this and you're seasoned and doing the more, you know, traditional 12-month lease, you know, getting long-term tenants in there, you know, you can go and you can stay in a property, you can walk through one, you know, probably in shorter time than I'm making this point, you know, figure out kind of the have, you know, the wills, the will nots, you know how to look at these markets. But if you haven't ever really stayed in an Airbnb, you can almost promise you that, you know, if you take that real estate mindset and, you know, go and stay in one, do a little market research, right? You know, go and stay in one and say, like, you know, what can I do better, right? You know, a little bit of hands-on experience with this stuff can go a long way. You know, me personally, I stay in Airbnbs almost exclusively. I love to travel. My wife and I, it's our big passion. You know, we don't have kids, just a dog, but our big passion is travel through the, you know, the domestically, internationally, and we almost exclusively stay in Airbnbs now, just for the, you know, the experience factor, the, you know, the affordability factor for what you get versus what you can have in a hotel, and just understanding that, I think, is something that, you know, is important from a very boots on the ground, because real estate is so hands-on at the end of the day. So if you haven't ever really stayed in one, maybe stay in a couple. You know, see, you know, kind of to that first slide Lame was showing with just, you know, like the most basic pictures, like, hey, here's a couch, you know, here's a poorly angled view of the kitchen. It's like mostly countertop and no appliances, right? You know, get out there and look at this stuff. It's, you know, definitely could be a big benefit to you if you're not someone who utilizes this, you know, service very often, especially if you're familiar with real estate. Good question that just popped up right here. What are your some of your favorite strategies for what are your favorite slow season strategies? You know, let you kind of elucidate on that a bit.
Yeah, so slow season strategies. So there's a lot of them, right? The first one being that you can participate in different segments of the furnished rental space, such as midterm rentals, right? Midterm rentals are defined as monthly stays. So people that aren't renting day by day, they're actually renting month by month. And typically you can get into certain segments of industries that require furnished rentals for those times those parts at a time, right? Such as Furnish Finder is a big one, right? They specialize in professional stays from nurses, traveling nurses. And that's one example of like being very dynamic and understanding how wide you can cast your net and timing the market, right? If I know that this property is a beachfront property, I'm going to make most of my money in the summer and a little bit into the winter, but there's a stretch of 4 to 5 months that are slow. I'm marketing well in advance local hospitals, local hospice cares of like, hey, are there traveling nurses that are in need of a contract? And if I'm getting a midterm rental, you know, again, you're really what you're trying to do in certain times of these slow season is you're really just trying to mitigate your expenses. It's not about profitability, because if I'm maximizing profitability in peak seasons, there's a lot of Airbnbs in the seasonality market that like you'll make all of your profits in 4 months. And then the rest of the year, it's not about like making as much as the mortgage. It's about really just mitigating your expenses, your losses, to where in a 12-year span or 12-month span, you should see positive results. But because Airbnb is seasonal, it's not like that. So to your question, there's going to be seasons that you need to understand. You need to know how to pivot. So that's one of them. The other is dynamic pricing. A lot of times people are just pricing well below what the market value is at the time, because for whatever reason, there's too many people that own 1 or 2 STRs and they think that they are data experts and they're like, oh, this season it's this. It's like, that is a number and a math problem that requires constant education and knowing like the market. So I would say just making sure you know your pricing strategy to make sure you're meeting the market demand at the time and you're priced effectively. But those are kind of my 2 biggest things. It's like making sure you're priced well and right given the time and season, and then utilizing other platforms and other ways to, you know, furnish to serve other industries.
Yeah, and that's kind of, again, a little bit of a lesson that, you know, while this is, you know, first and foremost, you know, a real estate kind of business play, there's things that we can certainly kind of learn from the hotel space as well, right? You know, that's kind of the progenitor of all of the short-term rental, if you will, is renting that room in a hotel. But hotels do that, right? You know, things like Priceline, Expedia, Booking.com is, you know, how they kind of, you know, mitigate some of those unsold rooms in slower times. And you have the ability to do that, right? There's services out there, there's strategies that you can utilize, but you're going to be looking at different markets, right? And that's a really great point that you brought up about, you know, traveling nurses, understanding where the other demand for short-term rentals is, because it's not just, you know, vacation rentals where, you know, again, VRBO stands for, you know, vacation rental by owner, VRBO, right? So, you know, that's, you know, while that's kind of a big use case for this, you know, people taking a leisure trip, there's the whole business market, like you said, the furnished, you know, aspect for traveling nurses, or, you know, maybe you're in a place that has a lot of traveling executives, you know, maybe markets like Houston or something might have people that are traveling in and out that might need to be in meetings for X number of weeks or something. So there's also other markets that you can explore, not just people that, you know, want to go to the beach, or if you're out in Utah, go skiing or off-roading or something. You know, understanding all those different aspects of what can utilize the property is, I think, one of the big key factors in helping to be successful in this, is just understanding who the heck is going to use this stuff, right? Because it's not just one avatar. It can be a bunch of different people, and there's a lot of cool and interesting ways to make money in the short-term rental space that you don't really get to be exposed to in just the, you know, kind of more traditional long-term rental market.
Yep, absolutely, absolutely.
Yeah, so don't have any other questions filing in. Did have one person ask, how can you get a copy of the recording? We do post all of these to our YouTube channel, and you'll also receive, if you registered and you're obviously here, or if you didn't attend, you will receive an automated email from us with a link to the recording directly on YouTube. You know, again, we share it everywhere, so we'd encourage you, if you want to share this with anyone that you know as well. You know, we try to make sure that a big core focus of what we do here at Advanta is education, bringing on great guests, and then not being gatekeepers of that information, right? All of our, you know, education is free. It is readily available. We try to make it as accessible as possible as well. So keep an eye out on your email. You'll get a copy of the link, contact information for our guests, and things like that for you to reach out directly, as well as, you know, where you can repeat and review the recording on our YouTube channel as well.
Awesome.
All right, great. Well, I think that kind of sums it up. Again, Lame, really appreciate you being on with us. The most valuable asset we all have is our time. You know, your wives, your family, and being able to get to spend time with, you know, people and do what you love and, you know, work to that effect is paramount. And taking some time out of your day to spend some of that valuable time with us and our listeners is greatly appreciated. So again, really appreciate you being on with us today. Again, anyone that has any questions, reach out to either Lame or myself. We're always happy to answer questions, whether it's on the investment side, like we covered today for Lame, or how to do this kind of stuff through an IRA. Again, happy to help you. And again, this will be posted and available for anyone to use and review at a later date. So with that said, we'll go ahead and end it off. Thanks, Lame, for being with us, and everyone else, have a great day.
Thanks, Alex.